Hey everybody, it's Stephen again, and I'm here today for the fourth video in this series. I set up this series in order to help out as many new investors as possible on their journey in investing and answer some of your burning questions. So today I'm going to take on a really fascinating video and answer what are the 5 most common mistakes new investors make when investing in the stock market. So let me start off by saying it's very normal to make mistakes when first investing in the stock market. So don't worry if you've already made some of these mistakes. As the famous stock market quote says, is with every trade, you either make profit or you learn something, but you can't have both. One of the most common mistakes that new investors make when investing in the stock market is not doing enough due diligence. So what you need to remember when buying a stock is you're actually taking fractional ownership of a business. Like when you would invest in any business, you want to know as much information as possible about that business. You want to know, for example, what products and services do they sell? What type of competitors do they have? What are their future growth prospects? Is there any industry regulations that you need to be mindful of? Really what happens at the end of the day is the quality of the stock is eventually factored into the price. So you want to be buying very high quality businesses. Don't just buy any stock because someone else recommended it to you. Always do your due diligence. The second common mistake people make when investing is chasing overhyped or overvalued stock. What you need to know is that many of these stocks that are overvalued or overhyped are at that highest point of risk. That means that many of the investors would already have made significant gains from these stocks and could dump on you at any time. So be really careful when investing in these stocks. You need to know the difference between value and price. Price doesn't necessarily determine value. So really dig into all the stocks before you buy them to see whether they have value and whether they can last the test of time. The third common mistake people make is by having short-term thinking. Many people think they can come in and become day traders and make as many trades as possible. Although this may be possible for some experienced traders, this is not generally the best strategy for new investors. You'd be a lot better off investing in really good, strong companies for the long term and let compound interest do its work whilst you're sleeping. The fourth common mistake is poor risk management and using too much leverage. As a new investor, you should never invest more money than you can afford to lose. You should start to invest very slowly, and as you increase your competency, you can invest more and more slowly. Also, be very careful of leverage. Leverage is a way of not only amplifying your wins, but also compounding your losses. So you should always be very careful with leverage because you can potentially liquidate yourself. The fifth common mistake is a lack of diversification. Never just invest in one stock or one sector or one geographical region. What you really want to have is a nice diversified portfolio with a different basket of stocks which are not correlated with each other. So if there's a downturn in a market or a downturn in a sector, you can protect your capital. Thank you very much for listening to this video. I hope it was really useful for you. As usual, please feel free to leave any comments, and also please make any suggestions that you have of future topics that you want to study in these videos. Until then, thank you for your time.